We're back. Let's see if it works. It should work. I see chat. I see chat. Let me know. I think we're good. We are back. All right. We're back. Yeah, glitch. The reason I've been like not streaming from this office is because this internet here has been super glitchy. And glitchy sucks, man. W technology, yeah, for sure. But anyways, yeah, it's a good day so far in the markets. We'll keep watching this as we get through. I think I think it's pretty clear that the markets want a Santa Claus rally, at least so far. It's a nice press. I mean, yeah. Have I seen a MITS manager? Yeah, I saw the stream. What do you mean, holy smokes? We are back. All right. Now retweet the stream. Hopefully it's the same link. I think it should be the same link. We'll give everybody a minute to come back. As long as Bitcoin doesn't glitch. Yeah. Well, Connie in the house. You know, well, I like Connie's. My mom's name is Connie, so W for the name. But yeah, Santa Claus rally looks to be starting early. Technically, it was a short week. Technically, it doesn't really start until next week. But I mean, I think we're gonna be good. We'll get everybody to check it. It's like she's here again. What is up? Dude, I should have brought the Santa hat. I have one at home. Man, oh man. Fail on my end, for sure. Santa, vodka, and pickles. Is this a Polish thing? It's got to be a Polish thing. Oh, you guys are like, I think you guys are like asking for longer term stuff. So I like what's going on right now. I think that this, we could talk about it. I think that this is like the Santa Claus rally starting early. And was it last week or a couple weeks ago? The Fed said basically in not so many words that we're going to go into Goldilocks, if you will. And I had a stream, I think it was last week, that was like, look, this is the soft landing for sure. And we had this little period of, let's call it disinflation, not deflation, but disinflation, which lined up to the charts actually perfectly around like just under 675 for SPY 675. And honestly, the more I'm looking at this, the better it's looking. But we'll talk about it today for sure. Let me do this. Let me go ahead and share my screen and we'll get this party actually started here. This work? There you go. So here's the debate. Gold versus growth stocks. Can they both go at the same time? That's the real question. If you guys haven't seen gold today, oh my goodness, and silver, all-time highs again. Technically, Goldilocks means that gold would underperform. And I think it was last week we did a little macro training. I have a smaller one today, probably not a big thing, but just looking at like, well, okay, I think that this relationship between gold and stocks or equities, if you will, it really does matter. And typically they don't both rally at the same time. So we'll get into that in a little bit. But before we do, here's what I got to do. If you're not familiar, every Monday, we just kind of go through and take a look at what happened last week, some headlines. This week first and foremost is the non-farm payroll stuff. And non-farm payrolls we got last week or the week before. Anyways, we got October and November numbers. What's wild here, and again, when you look at this stuff, bad data from a, let's say bad, I think like data that shows that we have less jobs being taken is going to equate to the market pricing and a higher probability that we get some more rate cuts in the longer term future. So one thing I would say is when I got these numbers, when we got these numbers, I looked at them like, oh, first thought is that, all right, well, these are kind of like halfway numbers and they're probably going to get revised quite a bit. But in the back of my head, we still have that, the Fed telling us, hey, look, Goldilocks is coming. Goldilocks is coming. And the question is when and what's that going to look like? And that is very much about that relationship between growth and inflation. And so when we got non-farm payrolls, this kind of gives us that growth look. So in October, the market was looking for actually positive 55,000 jobs. We came in negative 105,000, which is, again, good news for some rate cuts later on down the road. Right now, we only have 2 cuts priced into 2026 next year. What that did was it pushed the trajectory of the second rate cut up just slightly by like one Fed meeting. It didn't it didn't change the quantity of rate cuts that were expected for the year, but it moved that second rate cut up in probability just slightly. And then at the same time, we got non-farm payrolls for November. The biggest standout here to me was like, okay, so the negative number, if you will, this negative 105,000 mostly came from government jobs. Government jobs going down that much is not that big of a deal because it's all about the growth for the economy. So what that number is mostly looking at is this private payroll number. So if you split it up, there's government, there's manufacturing, there's private payrolls. And 52,000 positive here looks good. Most of the miss comes from that government number. And then we pretty much at the exact same time also get November payrolls here, which government slowed down slightly, manufacturing going up, private payrolls also doing better. So it looks good for growth. We just don't want it to look too good. Too good is going to be tough. And at the same time, we want to see inflation cooling. And we got CPI right after that. So CPI, there are 2 numbers. If you're not familiar with this, we have something called the headline number, which is just CPI, and something called the core number. There's also something called a super core. But anyways, these numbers are inflation rates. So 2.6 and 2.7 for the headline and core numbers. Honestly, compared to the prior, significantly lower. And so this was that big shift into what we could see as Goldilocks coming. And then the question really became, well, do we still have, how much more of this deflationary moment in time do we have? And honestly, the market's a forward-looking vehicle. It's probably done. That's probably it. The second that this CPI number came in, pretty much reversed everything, and we were ready to roll. The biggest thing here is growth, which is why it was the headline. Do we still have a lot of growth winners? And in the meantime, look at this. Existing home sales, I don't know, did anybody catch this? To a 9-month high. That is wild, right? And so that I think that existing home sales stuff is more of a longer term view, and why you guys might be asking about REITs or things like that. I do think that there's going to be some kind of housing revival, if you will, but how long does it take to play out, and at what point throughout the year, next year, is it a big deal? Look, it's a rates play, really. It's at the end of the day, it's a rates play. So I think it happens for sure. Is it going to outperform growth, though? That's a different question. In terms of the other headlines, look, gold and silver record highs amid rate cut bets. So and geopolitical tensions. So as long as we have geopolitical tensions potentially still happening, and what we call like the debasement trade, if you will, like with the dollar continuing to go down, those for sure. And not even just gold and silver. It's like anything on the periodic table, if you will. So like I'm seeing things like copper. I mean, platinum. Has anybody seen platinum? That thing's platinum might be a big catch up. Who knows? I haven't looked at the chart, but I remember seeing it was super low. And then we even have oil futures rallying, right, on Venezuela stuff. So look, we have the Santa Claus rally coming. We got through the Bank of Japan rate hike. I mean, it was a nothing burger, right? And then Santa Claus rallies headlines are pretty much everywhere. And we have Bitcoin at least holding, jumping towards 90K. Again, this stuff is like, it's a little bit more complicated, but let's get into it. So this is what I was looking at before. And if we're going to go into Goldilocks, look, U.S. equities do well. And if you're looking for REITs, they absolutely do well. Gold is typically a sell, but not a big sell. And that's where I was like, I need to see if gold's going to be a sell, why is it hitting all-time highs if we think that we're going to Goldilocks and gold and silver is still ripping? So this was like, had me scratching my head for a little bit. I'm like, well, I need to look into this. And so while we could be coming off of reflation, going into deflation, or not, like more deflation here, not disinflation. And we're going to be moderate inflation. That looks good. We're not in this stagflationary environment at all, right? Can we still have decent rallies in gold? Yeah, for sure. I think we can. But is it done? I think. Is it done is the question. So in the meantime, congrats to debasement. You know debasement? Yeah, debasement. Oh, has it become popular? I don't know. I don't even know if it's become a popular word or not. But look, we're not even technically at the Goldilocks time, or not Goldilocks, the Santa Claus rally time frame. Technically, it doesn't start until Friday. But for now, I think we can be still a little choppy, if you will. And again, I just want to taper some expectations. It's 1.33%, which, by the way, I'm pretty sure we did in a single day last week. I mean, this is just wild. So Santa Claus rally, not the big question. I think that this is definitively happening. So anyways, as I was doing, I have this stupid motion on this stuff. So as I was digging, look, there's this thing called financial repression. So you might know debasement as a term, but you probably don't know the term financial repression. And this is really it. It's the gold trade stays as long as real rates don't get progressively lower over time. Right. And sorry, this is ChatGPT or whatever AI thing. This is supposed to be nominal rates, and this is supposed to be the yield. But essentially, to get to the answer to my question about gold, it was, well, I had to back it up just a little bit and see what is the current regime, if you will, that we're in. And it's about this, not money printing, but it's this silent deleveraging. You guys, we've seen this in the Fed policy, and it's very much about that, the silent deleveraging, which is actually pretty good. But on this side, so the blue line here, this is like what we call GDP, or nominal GDP growth. And then the red line is the actual rates. And the distance between them, if the distance between them keeps going like this, look, then gold can actually, in this situation, continue to go higher. But it's really about keeping the cost of debt, if you will, consistently lower than growth and inflation. And that's the government effectively burning away, if you will, like the value of its debt. And so that silent deleveraging is like what this shows up is like, do you keep cash in your bank account at whatever the interest rate is compared to the inflation rate? Is cash still like a bad asset to have? And so as long as dollars are going down and the real rate, if you will, which is down here, we have currently negative real rate. The real rate is negative. I mean, gold can actually stay. And that's how we see this higher for longer in terms of actual rates. Do rates really go all the way down? We're not seeing that priced into the charts, right? We only have 2 rate cuts priced in for next year right now. And we have like no rate cuts priced in for 2027. So that is literally rates staying higher for longer, which end up managing inflation, but they don't typically crush growth. All that said, it's balanced with this stealth QE that the Fed's doing. This can actually keep the gold trade in play for a lot longer than people think. So I think the net of this here is, as long as the system essentially transfers wealth from like people that are saving to, debtors, if you will, or like into the gold, we see large banks buying gold, more of this stupid motion. This can stay, right? And so I'm like, all right, what are the mechanics, right? So the mechanics here is like gold, silver. If real rates remain under 2% for years, and no fiscal consolidation or productivity miracle is the AI trade. So if AI just absolutely boosts productivity out of the water, that's the pivotal moment, if you will, that gold will start to lose any kind of like, it will start to lose momentum at that point. And we're still seeing that in the charts. So we're not seeing NVIDIA at all-time highs right now. We're not seeing Microsoft or Amazon at all-time highs. We are seeing Google up there, but also having pulled back a bit. So as long as there's still questions about this AI boom, look, then this gold rally can actually continue. And at worst case, there's a possible short-term washout for gold, which at the year end might be 15 to 25% at most, but likely just a temporary dip. And then the real clean exit, if we're looking for, is that clear exit, like from gold into growth. If we see that in the charts, look, then it's probably over, and that will be due to it will be due to the AI trade, right? So again, as long as sustained positive, this is what's going to happen. So if we get sustained positive real rates, all right, well, that's going to flip the story on gold. We don't have that right now. If we have genuine fiscal consolidation, meaning that the government actually cut spending. I looked at Kalshi and I'm like, how much is Trump expected to cut in spending next year? There's like nothing. Nothing is expected to be cut next year. So if we saw that, all right, that would be a warning sign for gold. I'm not seeing it yet, right? Again, this second piece, it's like if growth outperforms globally, then for sure we'll see it. But that's going to be the switch that has to flip. That's going to be the switch that has to flip, and it's really going to come into this. And as long as there's still questions about this AI trade being real or not, gold can actually continue to rally. So I don't think it's a sell yet, but we have to watch. And so the question I had was, what am I watching for? Well, these are the things. And it's really just about earnings. It's about the AI trade or the sentiment around the AI trade. And until that really shifts, as well as if we cut spending, government cut spending, that's going to be a big one, and deficits shrink materially. I don't know. I think it can continue on. So that's all I had on the gold stuff. So if I was thinking about selling, and because I have real bullion, and so this is kind of the logic that I end up going down. So also feel unless USD strengthens, yeah, 100%. unless the dollar strengthens, in which case we will see the AI trade really boom. And that's what that's going to look like. So what do we have? What do we have on deck this week? Well, it's actually a pretty light week. So Thursday is Christmas. And so the market is closed Thursday. So we have a very partial week. I think Wednesday also the bond market is closed. Do we have a half day on Wednesday? I don't think we have a half day on Wednesday. I think we have full trading days otherwise. And then we're going to be closed on New Year's Day also the following week. So the only thing that we get two things this week. One, we end up getting the 2-year note auction and we get GDP numbers. First Jason stream. If you're welcome, if you're new for the first Jason stream, appreciate you hopping on. So today I think we get did we get the 2-year note? Looking. We did 3.49 versus, all right, slightly higher. Just slightly higher. Yields kind of coming up. I mean, we're good. So it's the 2-year note and the 10-year note auction, by the way, are the only two note auctions that I will ever really pay attention to. And that comes from, you guys remember the phrase like the 10 years, the 210 spread. That's the 2-year versus the 10-year. So because these two notes really, and that relationship between the 2 and the 10-year, really make a lot of people on it. Like people move a lot for that ratio. So those two auctions are really the only auctions that I'll really pay attention to. Do we have a half day on Wednesday? Beautiful. And then Tuesday, we get another look at GDP. I'm not sure if this is the final. I don't think this is the final look. I think it's the second estimate for Q3. And again, this is if we're getting towards this Goldilocks. Look, if we got CPI at 2.7, if we get GDP slightly lower, that's even closer to Goldilocks in my book. So, I mean, if anything, tomorrow we're going to have some more follow through, but it's all going to be based on this GDP number. It usually doesn't move markets that much, but because we're kind of shifting this regime from reflation to potential just landing at Goldilocks, that's why we saw the move on CPI, and we may see a smaller move on GDP, not as big, but we want to keep watching that relationship between these two. Wednesday is nothing burger, potentially half day. I don't even know. I have not checked the calendar. And then Merry Christmas on Thursday. Friday, we're supposed to get the rig count. I don't even know if we're going to get that or not. We may not get the rig count at all. But anyways, this is what we're setting up for. If we get a little bit of a pullback, I mean, it's going to be super small, honestly. But again, we'll look at the charts a little bit. I'm pretty positive the lows are in. I was looking for through 675, 670. I got exactly that at the index level. Yeah, this is looking good. Plus, we have new fund flows coming in too. We had a little bit of a rebalance on Friday. If you guys saw OPEX or what was it, quad witching or something like that. Quad witching, we had like the biggest options expiration ever. Which, by the way, every options expiration should continue to get to be the biggest ever. But yeah, I think this generally looks good. Like we might get a little bit of pullback sometime next week, but I think it's everything for me is looking good. Now, where do I want to look? This, I don't know if you guys remember, this January effect should be like the most bullish setup. And this is IWM. So mid to late December is that last pullback on the chart. It doesn't look, just so you know, the chart does not have this kind of a pullback. I get that, right? I'm not an idiot, guys. Like I know that we didn't have this pullback, but we did have a little bit of this consolidation. We had a small dip in November. We had a smaller dip in December. And what's the strongest index today? It's IWM. It's all IWM. So this is my Rivi, which I cannot believe is still holding. Hopefully I'm not talking too soon. It's still holding. I think I'm gonna put Rivian for my top pick for next year. No offense to the hoodies, but I just feel like Rivian is just this. First of all, Rivian, we can look at it in a little bit, is actually holding these levels for the first time in forever. If it holds, this is it. This is it. And next year is supposed to be a major transition year for Rivian. I mean, major transition year. That might have its own video, but look, R2 coming, R3 coming, which I am 1000% buying an R3. That thing looks pretty cool. And it fits exactly what I need. Yeah, I'm excited for that. Plus, there's news about them not having to be so reliant on NVIDIA, which, is cool, but I think it's more about sentiment. 1.45% right now in IWM. We've been talking about this. We've been talking about this January effect. This is it right here. Do I think that SPY can get to 700? Absolutely, I do. But I also think that IWM can get over like 270. We might even see like 300 something by March on IWM. I mean, that would be amazing. What do you mean no hoodie? Of course his hoodie's going to be in there. Of course hoodie's going to be in there. But from a percentage perspective, I mean, Rivian here now, yeah, this could be the sleeper, the next 10 bagger. Rivian here now, if it goes and it is a transition year for Rivian, am I going to see a triple on hood next year? Probably not. I do think that I'll see close to like 185, something like that. And then probably a pullback to maybe even where we are right now, but we'll see. And I think that first push does happen earlier in the year, probably after January. I'm not sharing the Rivian chart. We'll take a look at it. But this is going to be a big one. HIMS, yeah, probably not so much. HIMS is not this. It's not growth. HIMS is what is growth, but it's healthcare. It's different. The biggest issue I have is that, listen, from the 4-year cycle perspective, this is, year 1, 2, 3, 4. To next year, technically it's a midterm year. Usually we do have a bit of a pullback in a midterm year. But for right now, look, we can still get this. That's still perfectly fine. And then I would probably expect some kind of a pullback, typically right around April, May. What's the saying? Sell in May and go away. And then the big, big dip buys right in here, late Q3, early Q4 next year. So I'm going to want to have some cash ready for that. In the meantime, I think any company that's in major transition mode could probably buck this trend for sure. Probably can buck this trend for sure. I think we're good at the high level stuff. Yeah, I just have this. This is 100-year seasonal average. Look, coming in December, January is kind of hit or miss I got to move this over. January is a little hit or miss, but from now till April, May, right there, we should be good. And then June is kind of sloppy, July, but then August, September is the dip. Every year, that's the dip right there. So we got definitely a lot of time. February looks like slightly flat to negative. I don't even remember that. You guys still coming in. Oh my God. Yeah. And if they can actually become real profitable, dude, that's such a huge thing. I mean, we're like huge. They're not priced for bankruptcy anymore, but if they can become if they show the slightest profit any point next year, I'm like, boom, $50, $60, $50, $60, right? Yeah. Regardless of seasonality. All right, let me take some of this down. So here's SPY. Before we get into the charts, I do have to check in with our good friend, Miss Cleo. So give me 1 second. Let's go ahead, roll her intro and see what she has to say. I was so close on the transition. But here it is. All right. So Miss Cleo gives us 4 cards this week. Only 4. I mean, so we got, where'd he go? No. So if you're not familiar with Miss Cleo, she's the T for tarot. And she gives us a little bit of forecast. It's mostly for comedic effect, but we get a theme card, if you will, for the week. I don't think I've ever seen this theme card before. What is this? Temperance? Temperance. I don't even know what that... Does that mean like lame? Does that mean sideways? It's possible. It was very, very low liquidity week for sure. Okay, I've definitely not seen these cards before. What is this? The 2 of Pentacles looks like a Joker. Yeah. This card, what is this? 6 of Cups. I remember this card. This is like charitable giving, so probably not the best one. Maybe a little bit of a pullback. Tuesday is what she's saying. And then skipping Wednesday, Thursday off, and then the Knight of Cups. I have no idea what this stuff means, so let's go ahead and ask her, right? So she wrote up a little blurb. So the theme card is Temperance this week. The market closes early on Christmas Eve and is closed on Christmas. Last week we had an OPEX quad which is where most of the trades for the remainder of December were deployed or closed out. Yep. Agreed. Perfect fit for Temperance, which has keywords of balance, patience, and harmony. Balance, patience, and harmony. But it's a low trading week for sure. Like not really trying to do a whole lot of stuff. In market terms, this implies chop and several flat days. Well, dude, she's only given us 3 cards. How do we have several? Trend is very unlikely. So she's saying a flat week. Liquidity will be low for most of the week. So my guess is that it's one of the most boring weeks of the year. Possibly. Low liquidity environments, though, I don't know. Low liquidity environments can produce some pretty violent moves. I don't think we're going to see that, but it's TBD. So today, Monday, 2 of Pentacles, supposed to imply balance in the direction of mean reversion. What is that? Gap up and pull back. But history says otherwise. All right, while it's true that mean reversion is its nature, it prefers trend to balance. Therefore, I expect, is Miss Cleo like fading the actual card's meaning and interpreting it differently? I don't know. I expect to be chasing momentum here, but with light sizing. That's fair. I'm good. Tomorrow, Tuesday, 6 of Cups. 6 of Cups usually means mean reversion and often in the form of a trend. So Miss Cleo is kind of calling pullback. Turnaround Tuesday is what we call this. It's the mark of temperance, keeping us in balance, offering a bit of both worlds. Fair. Cups bring flowing price action that moves at a slower pace. This can make midday mean reversion feel like a change in direction, but patience is required here. Moves will take longer than normal to manifest. Yeah. If it's anything like this, honestly, I might take the week off. But Wednesday, Christmas Eve, bond market close, stocks close early, will pass. Thursday, Christmas Day, Merry Christmas. And then that brings us to Friday, 2-6 Knight of Cups and back-to-back cups, all low energy and slow and distracted price action. Again, fits temperance. So maybe a little bit of bounce. Looking for a continuation here, but in the form of slow build, which is the opposite of the Knight of Swords. Price action will be similar in pattern to what we saw Tuesday. All right, so tomorrow's the day that we know. So don't change tactics. Trend is possible, and you can chase it as long as you buy time. Oh, now she's an option trader. Miss Cleo is an options trader, apparently. I would expect, though, that this will be a choppy day that fills in the middle of Monday and Tuesday's ranges, respectively. Fair. So if we get it down Tuesday, then fade the close. That's what Miss Cleo is saying. Recap, a decent chance of offsetting trend with a mild close to the week. Expect low liquidity. Holiday price action is usually a snoozer. Well, clearly Miss Cleo has not been around for some of the big ones. Sometimes a snoozer, sometimes not a snoozer. So we shall see. But this is how we're going to do it. So number one, I usually use like a 30-minute chart that's what you're looking at here with the extended hours turned on to kind of give me my view of the world, if you will, the broader trends. I'll zoom out quite a bit. And as you can see, look, the last NFP zone, or the last time we got, not this most recent round, but we got a lot of non-farm payroll data that defined the trend. This right here remains the absolute lows, 652s. And I was looking for a small retracement into this October area here, where this is actually, I believe this is an ADP number, but right here, I got a small little overlap below the 675 here, as low as 670 right there. That was literally the dip that I was looking for. And quite frankly, it was, I mean, it doesn't get any more perfect than that. But I can draw this like prevailing trend. From a trend count perspective, even if you were to do this on a daily trend, we have a high, lower high, lower high. This ends up being a lower low here from that prior low. We had a downtrend forming, but the second that this right here gave us a new high over this area right here, the second that I got that higher high above this one, to me, I'm like, all right, I'm going to be looking for a retracement. So I had quickly pulled up a measured move. And so this it gave me a lot of confluence, honestly, right into under 675, which would have been that non-farm payroll level right here. But in this box as low as 670, I mean, we got nearly exactly that. And boom, up and to the right. So from here, moving forward, what we don't want to see, I do not want to see a lower high. So to me, this here now has to break through. Not has to, but if this is going to be like a trend consolidation, this I want to see make a higher high up there over this last high. So I do want to see this crack 689, 690, call it, on this current press through the Santa Claus rally. Can we get a little like bounce up in here? Yeah, for sure. I think we can. But I want to see this. And quite frankly, that is generally speaking the trajectory that I'm looking at for this next phase. And what this is right here, this is a measured extension from that turns this entire pullback zone into consolidation. And it's about half of that range, which really close to 700 year end for SPY. But by the end of the Santa Claus rally and then some, like absolute peak, I think 715. But yeah, that's how I see it right now. And as long as we're just going one step at a time, and I'll drop this back into my trusty 30-minute time frame chart. Look, we have these low volume pockets of liquidity that we need to fill in. This morning, we just filled the first one at 685. So these come from really like breach areas. So over 682, we had this low volume pocket right here. And we have another one that's going to be right about 688. So 688, I think by the end of the week, honestly, if I throw an average weekly range on this, that is an extremely small average weekly range. Good night. An average weekly range to the upside on average, which it's not a full week, could take us to 700. My goodness. And a failure could actually take us to, 669. But I don't see that happening right now. For now, look, I think as long as 682 holds, which is that prior NFP level, 682. This is what we're going to call like an NFP high. I'll just make this real big. NFP high right there. That's going to serve as support for us. And honestly, if I pull this back to the left, I can see a lot of confluence too. So this has been a level for quite a while. So it's 682 for support, which is I think a little bit earlier in the pre-market. So if Miss Cleo thinks that we're going to get a pullback of any sort, that's the Bible pullback to me. There's a legitimate gap around 681, but I don't know if we're going to actually fill that today. That would be wild if we do get that. But again, as long as we're trending over 682, this is over 682. This is not going down. And today we have one open above. I'm looking for a close above this level. So today I want to see a close above 682. That'll give me one day. And then if Tuesday and Wednesday holds over this level, yeah, it's just a foregone conclusion. 700s, that is. I mean, definitively, if we're over 685, it's 700. I don't even care that much about this upside. But look, 682 remains to be the spot. On Qs, that's pretty similar. So that's where support's going to be this week. Qs had a bigger push. I actually think Qs can get to 625s on the week and continue, because Qs now become a bit of a catch-up trade. They still have yet to put in they still haven't broken their kind of like prevailing downtrend. So here to 625, like this, Qs is still not breaking out. This can pull back and do this, but it's not until we're over 630 for the Qs that that is actually ready to roll. So Qs is just in a bit of a catch-up moment right now. So it's still possibly locking a lower high, but the good news is on Qs, similar kind of pocket right in here. That is a higher low. So expect some kind of consolidation. On QQQ, support is just around 610, roughly that 50-day simple moving average. But anyways, yeah, let's take a look at a couple of things. So gold. Oh, I'm not going to lie. I've been kind of fighting this one. I mean, I saw a little bounce, but I have not. Up here, I actually faded it. And I'm still thinking like, dude, this, which is why I went into this. I'm like, okay, what am I missing here? So this consolidation here, I got to break through. Fully breakthrough consolidation already. So that's completed. 398 can be a pullback, but honestly, 398 can still be a viable pullback. The trajectory on this gold, 430 GLD. What does that put me on GC, on actual gold? On actual gold, $4,700 an ounce. $4,700 an ounce. My goodness. Silver is even stronger. I mean, I'd have to pull this silver chart to like weekly. This is insane. But silver I have in the 70s. I've had in the 70s for a while anyways. And this is now becoming your second most bullish all-time chart like ever. If silver can hold over $50, like that's insane. Yeah, this has been an insane 1, 2, 3, 4, 5 days. 5 days only. In the last 5 days, silver is up 30%. Trading days. That's insane. Or I'm sorry, this is a weekly chart. Last 5 weeks, silver is up 30%. That's intense. This is, I mean, no stop, no pullback, just going and continuing. So, I mean, $70. $70. We know what to look for. If I'm in this trade, now I comfortably know what to look for if it's going to lose its momentum. look, I don't see those things happening in the near future. So, so for those reasons, plus geopolitical concerns staying, this is this looks like it can continue to have legs. I was seriously considering selling some silver. There's so much silver. I'm like, this is crazy. But I mean, the more that I look into it, I'm like, if I sell it, it'd be super early. And it'd only be a little bit. But no, it's possible that we see $85 before this is over, or near 100. And I'm like, oh God, could you imagine $100 an ounce for silver? No, not weekly options. Definitely not. When is crypto going to break up or down? So the same thing happens. So I don't know if you guys know this, the debasement trade, I guess is popular now, but it's essentially like with QT ending, it's going to hold. It's going to hold. I don't see it pulling back. I mean, hold is relative, but I just have this thing about Bitcoin, and we can look at it, is that you need to have a lot of work. This over here is what Bitcoin needs to look like. There's a lot of work that has to happen in a specific order. It's not even close right now. It's more consolidation. But again, it could still come into 70. It's pretty stable. This pullback right here is an extension from that breakdown up here. So this like overhead resistance now kind of extension. So I basically 2.5x'd this range. So we got to get over 92, 2.5. And the downside is 76 right now, or ish 70K. But crypto is one of those assets where it's like, if you're new to this space, dude, it's not like equities. Doesn't move like that. It's extremely technical, and it blows through like liquidity pockets like nobody's business. So all that to say is, like, Bitcoin can, in reality, go down to 69 and then right over 150 plus in, a matter of weeks. Like, that is not unusual or abnormal or anything like that. For right now, it's 92K. That's the resistance. So 92, let's call it 93 just to be safe. So $92,858.53 if you want to be extremely explicit. That is your overhead resistance. That was support over here. And that is all you're seeing. You're seeing prior support become future resistance. I mean, it's not super complicated, but this is Bitcoin, technically speaking. We have very, very near-term support down here, very near-term support that is holding right here. And I have a pretty measured move to the downside. Look, in this box between 93 and 85, it's consolidation. So I just don't see anything happening to Bitcoin explicitly. And even still, like, a little blip on the radar like this could be that liquidity grab moment. But it's probably going to be after Christmas. So Christmas Day, just like Thanksgiving Day, you guys had an opportunity to talk to your friends and family when you see them all, and everybody's gathered around the dinner table, whatever, or partying, whatever. It's going to be up to you guys. It's going to be up to everybody else to talk about crypto. And crypto will have a second chance to show its colors. If it's like Thanksgiving, it's probably going to be nothing burger on that actual day, but it's more about how that day is digested moving forward. So this is January to me. There's only a couple days left in December anyways. And what I will say is that within those couple days, it's very easy that you could see at least this to 100K. You could absolutely see that. But this was the prior resistance. I expect this area to act as resistance like it did over here. and we had it acting as support for a little bit. If you get up to this area, I mean, I expect another pull like drawdown, and it's probably going to look a little bit like this. And that's totally normal in the course of a week or two. Totally normal for Bitcoin. But if you're used to equities or slow moving assets, this ain't that. So I guess know your market. Ethereum, same thing. Tommy Lee, there's a bunch of this stuff that goes out about Ethereum, like, and bmnr's kind of like base case over the weekend, I think it was. You don't touch bmnr. About bmnr's like base case for Ethereum. They said it was 1800. Look, it is 1800. It's always been 1800, but it's not happening right now. It's 1850. Well, possibly 1850, possibly down to this, to 1650. So, I mean, if we're going to say 1800, might as well say 1650. And we might as well legitimately take this and say 1750. But it has always been this general area. Right here, right now, what we're looking at is a very basic pullback, perfectly landing right here at my golden pocket and exactly at the level I was looking for, 2648. So here's what I'll say. As long as this box is holding up to 2750, we're not going to see 1850. So does Ethereum lose 2750 between now and then? I mean, that's TBD. We have to get over 3170. 31, call it 75 again if you want to be safe. But you got to see that, and then no, it's just not happening. We're going to do that. You can see it hold. But to me, my situation has always been some kind of consolidation just like this for Ethereum. And so to me, it's acting right. And again, if I just pull this back, take off all the drawings, I mean, this is just one giant box. Quite frankly, here's your giant box. If this is my downtrend and this is my uptrend, it's just massive consolidation. That's it. And so can it do this in the meantime before it gets through? That honestly, that's exactly what I'm looking for. Exactly that. And then we'll see. But that's not till later. And in the meantime, look, I mean, you have pretty clean overhead resistance, and you're dealing with pretty clean. This is a weekly chart, by the way. A pretty clean pivot point right now, where it was rejected before. It's rejected this general area 1, 2, 3. This is the fourth. To me, this is the fourth attempt. So you have 1, 2, 3. Fourth attempt is good. So any pullback on this fourth attempt, in my mind, is going to take us to, like up and out. So that's what I'm looking at. So yeah, I subscribe here. And again, if you're not familiar with how the crypto markets work, that's on you. But here's the prevailing uptrend, like all of that. Prevailing uptrend. We're on it. We just need to get right over that one little blip in the radar right here. But as long as we're holding here, look, we should see that. And then you got to deal with this right there. It's only been like that if you've expected like a moonshot, which I'm telling you, no, don't expect that. I've been bag holding for, I don't know, over a decade. So I'm fine. Do we go higher for Ethereum first? No, not usually. You usually look at the relationship between Ethereum and Bitcoin. You just Bitcoin versus Ethereum as a ratio chart. So there are some points in time where Bitcoin or right now I think we're here, right, where Ethereum is starting to bounce a little bit better, but Bitcoin I think is going to hold. Bitcoin's not going to have the big lows. I don't really care personally about Bitcoin. It's probably, maximum right now you're going to get to 107 at some point right in here, at which point that's going to be resistance. So expect another pull drawdown, and then you have to deal essentially with this, what could be head and shoulders moment on Bitcoin at 108, 107, 108. And ideally that fails and becomes a pretty bullish indicator. But yeah, this is your prevailing uptrend. Let me make that green. It's intact. It's intact. So, you're fine. You're perfectly fine. And then this would be what over here. So it's still like 150s maximum, but that's not, 150, 160. I don't know. 60, 70%. On Ethereum, it's about the entire range. On Ethereum, it's about turning this whole thing that is consolidation into a breakout zone, which, again, if you did that, I actually have it. This is that measured move. That's the 7K. 7,500. Right over there. Next year. Might be next year. Winter, who knows? But the trajectory to get to that, is you got to get through this consolidation. And at that point, you got to get over 5. And then fine, we can talk. But we're not talking about that. So like, if you're really expecting that, look, you're just in this consolidation phase, which means that you could have some liquidity events too in the meantime. Everyone on YouTube, I wasn't screaming that. You can subscribe to this channel. But so in terms of bmnr, that's multifaceted. One, you have to have the digital treasuries, the DATs, if you will, still continuing to have some kind of hold some favor in the market. And two, I think it can, but during a consolidation, I don't know what bmnr is going to do. While ETH is in consolidation, bmnr could go down. I think we probably bottomed, at least for the near term. But if you get that pullback, if you do get a pullback in Ethereum, bmnr is in the teens for sure. Like, it's in the deep teens. Here's that 30-minute chart. If I took this area here, here's the low end of the box, 27s. Look, you got up and over just a little bit, ran right into overhead resistance right here, which we've had as a measured move anyways. And honestly, right now, you're just coming back into the new support area. So the thing is, below 2750, this is not the lows. And so that puts your downside low teens, possible single digits. Oh God. 14s. $15 to $12 right there. But we're a ways away from seeing that. Right now, look, right now, this area is holding a support. It's not breaking out. Ethereum's in consolidation. So I'd expect this general area to be that consolidation. It's not going to be till this. If you see something like that, and that's below 27. So if bmnr breaks below 27, yeah, you either buy some puts and or realistically you sell some $15 calls if you don't want to sell it. That's what you do. You sell $15 calls, probably with time, which will be deep in the money. It's the only way that you're going to get some protection. But it's not that time yet. Right now, we're not there. AG is a good way to play. I haven't seen AG. So is that as opposed to the old paas? So paas, Pan America Silver, if we're going over here. Dude, all right, so that's a breakout chart. That's intense. That's 80s. Good night. Pan America Silver. That's a weekly chart. Oh, that is a breakout and a half. Do we go into these silver miners? SILJ. There's a small cap silver miner chart. 29. Oh, goodness. This is an ETF that holds all the small cap miners for silver. That's intense. I can't remember the last time I looked at this chart. Do we make this a pick for the year? $40? I don't know. What was the other one? AG. This one's a bit of a laggard, so you're probably good. AGI is the gold miner one. I mean, these are, look at this. You guys don't know this one. That's like, so anyways, there's a lot of options out there. Over $40 on an AGI. Oh my God. It's intense. I don't own this anymore. I used to. I should not have looked. You ever look at a chart on a stock that you used to own and you're like, what an idiot? I feel like that right now. I feel like that right now. But as long as, I mean, honestly, as long as these trades stay in play, I don't think Bitcoin and Ethereum are going to fail because a lot of that is the same. A lot of the crypto stuff has the same kind of logic behind it. It's like if the government is going to fix its problems by printing more money or getting closer to QE, then anything that you can't print, if you will, should be good in theory, which is Bitcoin and Ethereum. These, I mean, because they move slower. They're more like investments, if you will. Me with rocketlab. Oh yeah, speaking of rocketlab, I mean this bad boy. So I'm done adding on rocketlab, but new all-time highs in place. This guy, look, what a snipe at 38. I didn't sell it. I don't think I want to sell it, but this move has been absolutely incredible with SpaceX like coming. I think that changes kind of like where the market cap can and should be. Clearly, the market is currently front running this. This is a 4-hour chart. I mean, just if you see Matt, ask him for some spare change or something. Our buddy, the chancellor or the commissioner of the White House now, Matt Money. Anyways, I said before, I think this has a three-digit handle on it. That's just a measured move from here. And this area right now, this was prior resistance around 70. So even pullbacks here can be deep. Let's just measure this from this $50 move. Yep, that can get you, there it is. That can get you this lower end support around 63. So even on a heavy pullback to 63 anything like that, yeah, that's how you get there. So I don't need to chase this here and now, but a pullback to 63 and change right around this prior support area, right here, right here, right here, which was resistance also here. If you see that turn into support, that's it. Your next move is triple digits. Let's just make sure once you're over 70 for sure. 95, maybe it undercuts it slightly. But man, I can't believe this thing. I mean, I guess I can believe it. Which, you know, I picked 2 stocks back in the day for the 10 baggers in 10 years that were post hoodie and post Palantir. That was Rocketlab down here at like $8 or whatever. But Rocketlab down here, when it was doing this, and I'll just take this, you know, space is space, over 12 in this general area from this full blown, you know, $21 high to the absolute $3 lows, you know, a bearish retracement. You guys know how we do this. The bearish retracement took you right into here. And the second it was over 12, it's like up and to the right. And you can kind of see, like, we've done this over and over and over, this exact exercise. Look, here it is one more time. And you even get a pullback right in that 14 level. And I remember going over that level with some people, and I was like, that's it. That's the dip buy. That was the last buy available. And then she just went, right? And she just went to what? Now we have to go measure every single time. Like, where's the move? But it takes me to Rivi. And so, like, I'm going to throw this on a weekly. I'm going to clean up the charts, take all these indicators off for just a minute. Rivi's all-time high is way up there. I mean, I don't know how it got to 178. But I do remember it getting there. Dude, so we're way down here. Just the basic is like 90s. It might think I'm crazy or whatever, but I don't think it's going bankrupt. I see the lineup for these things. I just would say, look, I think there's more upside right now in the near term for a stock like Rivi into 2027, 2026, 2027. Will it be bumpy? For sure, right? When they release R2, when they release R3, there's going to be issues. There'll be lots of pullbacks in the meantime. But anything in that $19 range here now, yeah, I think me and everybody probably going to be a buyer for this, like for this one. So it's more like 2-3 years at least that I think that we can get some like real momentum into the 40s. But again, it doesn't take a whole lot for a stock like this. We just filled a bit of a session gap or nearly filled it. So you still have to be somewhat concerned because you're through that first level right over here, 1890. So this is done. Beautiful, right? Can we come back in, like breach it a little bit and have some kind of retest like that? Absolutely. Absolutely. That's a big pullback from a percentage perspective too. So I'm not chasing this today, but if I see anything close to 18 again, yeah. I think I'm going to add because this move could be something that lasts for a while. But I think this is a transition. Like, I think Rivi's going into a bigger transition net, right? Maturing as a company, et cetera. Yeah, I just do Rivi for me. Because honestly, legitimately, I'm like, this needs to be a hood size position. If this is happening to me, like not small. And it's not small right now. It's actually decently sized, but it's not hood size. But anyways, how about this? I got to buy some Rivians first. Then I'll drive them. We'll make some content. We'll go see RJ and then we'll talk to him and then we'll figure it out. But yeah, I'm not joking on that one. Nebius current request. I think again, consolidation here. Nebius is the is it NeoCloud? I don't know if it's NeoCloud or not, but held exactly where it needs to hold. From here, this needs to get over 90, like over 106. If it can get over 106, then you're up and to the right, and you have dip buys possible down to the high 90s. You could see that, and then you're off and going. And then this consolidation really takes you up and out through like 175s, which I had like if you really like this, I don't know that you need to go out and buy equity. But I did have since that is the target on Nebius, and you'd have to see some kind of trajectory like this-ish. I had like a 2027 debit spread that I modeled out on Nebius that was like 150 to 2 something. I'm almost calling. It was 150 to 2 something. I'll have to pull it up. Which I opened and then closed later. But I think it's good. January 2020, 150 to 200 call debit spread, 2027. Yeah, which captures this entire move. So at the time that was trading for just around $5. Yeah, that's a 1 to 10 risk reward, risking 1 to make 10, because that would be $50 worth debit spread. So I think you might still have that available. That's January, like 2027, not 2026, 2027, but $5 to make $50, not bad. No, GNOTs did not. I've been Rivi before GNOTs, but yeah, no, he's more vocal about it. IPO with Tesla going wild. I mean, yeah, at the time for Rivian. Hoodie, we can take a look. So Hoodie's still in this consolidation. I mean, it's looking decent. 117 was the low-ish that I would have liked to have seen. I don't think we got exactly there. We got just into this prior dip area right here, 112. To me, I had about 117. Oh, I guess we did. So this was it. 116 to 115 and change. That's the last step to me. If it's not the last step, then we are legitimately in trouble. So that's my concern. I think, in terms of this one, I think it's easier to do it this way. The truth is that I think it can be a little choppy. And I made this a long time ago, and I remember bookmarking it. But this is NFL and college football total wagers industry-wide. This is about event contracts. And so right now we're coming off of early December. Orange is college football. So we're into the bowl games and stuff right now. So we get this little dip that's actually pretty normal into early January right here, which is when playoffs really start. And at the same time, like regular football contracts, will they stay steady? You lose that kind of like exponential growth. This goes from like 2 billion industry-wide wagers and slow climb over the next month, but it's a super slow climb. And in this period where college football contracts and things like that do like come off. I think that moment is when we could see this, which is what we're in right now, this hood volatility, or at least minimum consolidation. And then this is what nobody knows other than me or people that look at this stuff, is that come January, event contracts will absolutely, I mean, in your face, explode right here. In your face, absolute explosion. I mean, to the tune of 3xing what we're doing right now. Not just that, but this is college. Also, 3xing where we are right now. And just before that moment happens, there's a little bit of a pullback, which may scare some people that don't understand that sports betting industry or don't really follow it. And I think that's exactly what we're seeing. Does this kind of bottom out around like 115s? I think so. Is it possible, though, that for whatever reason, we see a bigger pullback to like the 80s? It is possible. Do I think that happens? I do not. Do I really care? Definitely, I do not. Because what for sure, regardless of who you are, what you know, if you don't know that this industry-wide trend is coming, you don't know, right? And I'm telling you guys now, it's going to triple if Hood does nothing. But Hood doesn't do nothing, right? Like, they don't do nothing. They're over there working their butts off every day. I went into the sports betting app for Hood again, and I'm looking at a complete revamp. Since the last announcement, I mean, insanely new like UI. So we have spreads on college football now. We have player props. You can bet on individual players. You have some combos, not really a lot of options, but they have combos available. That alone, that one little shift, it probably doubled Robinhood's addressable market in the sports betting arena. Boom, overnight. Nobody knows that. Telling you right now, that's what happened. Not to mention, look, this is coming. Whether or not you understand it, I don't care. But this is absolutely coming. So is Hoodie going to be on my top pick list? What do you think? But this is industry betting trends, not Hood, right? This is the sports betting industry as a whole. And so, you know, you look at things like, which I forgot to do some of the other stuff that we typically do, my bad. And I keep referencing this, DraftKings. It blows my mind that, Google, that DraftKings earnings, I don't know what they're, Don't send me personal emails, please. Their earnings is estimated to double. Goodness. How do I get this revenue? Yeah. I'll have to zoom in and make it over here. So it's over here. This guy. Their revenue is supposed to go from 1.2 billion this last quarter that they reported, to 1.93 billion without announcing event contracts or anything else like that. But that's because of typical industry trends. Typical. So, yeah. Again, if you don't know this stuff, I mean, you don't know, which puts my Hoodie up into that 185 type area. So this pullback, I think, was good. It's as deep as I wanted to see to keep this chart generally healthy. To me, it looks good. That pullback was perfect. And then again, you know, if you look at this last resistance area, what happened? It just became support. So this is resistance turning into support. I mean, yeah, man, I'm happy. It looks good, but it like crypto, I'm kind of like tapering those expectations, because if we do see like a bit of a blip on the radar in those event contracts, people are going to start being like, oh, well, Hood didn't deserve this, that, or the other. But that's just going to be an opportunity, because at the end of the day, they most likely don't understand what's coming in January. And it's not small. Like, it's not small. Until then, what we have is a bit of a consolidation. So I'm just going to take this general area, which means that we could see it pop up to like 130s or so, and a pullback into the 120s and go nowhere for a while, right? And then once that finally happens, then this whole thing here does become consolidation. And it's not until like something like that happens, or something to that effect, right? Like wherever that happens in this area, till we break that prevailing downtrend, which is here, and we hold this prevailing uptrend in consolidation. Look, this is sideways price action. Not expecting a whole lot until we see those kind of like January numbers, and then that ends up catching people off guard, which should break me to 175, give or take. I mean, if that happens, that's a big deal, and then we pull this back. But at the end of the day, what is that for the year? I mean, it's 50%, maybe a little bit more, at most 200 for the year. I mean, that's a super stretch, but that's not Rivian type gains from percentage perspective. So because of that, Rivi's got to go on. And that is it in simplest terms. Does this look good? Absolutely. This looks good. But 185s, something like that, I think realistically, max, best case scenario for a hoodie, which is great. I think, let me do a quick time check. I mean, we've been about an hour and a half. Honestly, I think that's good. Let me see if I do. What's DB? Oh, yeah. So this is a global. That looks good. This is another slow mover. You don't want to trade this, but you can own it and say, all right, this should be going to 42s for DB over a slow period of time. But expect a pullback here. And anything around 36s is buyable to 42s. Lulu, I mean, not. So if I'm thinking, so Lulu's okay. Yeah, it's got to get over 220 and hold like in strength. Otherwise, you're essentially just retesting that prior low, 226. You guys can see it here now a little bit better. But you're retesting this prior breakdown. You've rallied up to that and the 200-day simple moving average hit your head. I think this can come back down into 90s and be a low grind, but it has to look like that. Not a big discount here. It's not out of the weeds. So it's the next higher low on this chart. And so what you would do is kind of like take these lows right here. And if I zoom in a little bit better. So it's these lows, these general lows right here that are higher. Break of structure, not a large break, but as long as it holds this general trajectory, I think it's fine. This, to me, looks like a lot of consolidation coming. Unless it's over I would call it 230 just to be safe, which is that big, massive resistance area up here from way back, which, yeah, holding 206 is cool, but also just a base bare minimum requirement to have a shot at getting there. Holding 206 is a bare minimum requirement. You lose to 206, then you probably do see that 190 level, at which point you want to see it hold and bounce. And this will end up being consolidation like this for exactly what I was kind of pointing out. So, no, not super interesting right here, right now, but depending on your time frame, like if your time horizon is long, you just have to monitor the company, what they're doing. Speaking of, if I thought that there was a revival coming in home builders or retail, I mean, the highest beta name is RH. It's both retail and home builders. This thing doesn't look like much, but it's 28% off the lows, more recent lows. You got a bit of a better hold in here. I'll just duplicate that. And as long as you can hold 165s for the foreseeable future, this is on the mend. So if my time horizon is long enough, I mean, honestly, RH is probably a crazier play just to get back into that $200 kind of resistance area at minimum than Lulu. And I again, another stock I don't think is going out of business, but has like that multifaceted, like, can I get a home builder rebound and a retail rebound at the same time? It's clearly, it's just, if you didn't know, it's higher end retail. But yeah, this looks like two 12s for now, which will probably hit its head on resistance. And then you want to see this, it'll pull back, hold, and then have some more consolidation, then up and to the right. So a lot of time here, a lot of damage done to the chart, but there's a pretty clean and clear recovery, like step-by-step process that this has to recover. And even just from here to here, and then you do it one more time from here to here. Yeah, 290 to 300s. And if it ever gets over 350, then you're quickly 430. It's like that. So for right now, I think you get this, and then you have another tradable range. You have multiple tradable ranges here. But this one, I mean, if you want a crazy like turnaround story, it would be here. Just keep in mind, every time you lose one of these or you don't get through, these become like retracement areas also. So if it doesn't make it, it very much looks like this. But yeah, I mean, that's RH for you. If you wanted a high beta turnaround that covers both retail and home builders, that is it. If you want the bank is this. It's I mean, this stuff, the bank stuff, I think, in our group, one of our guys talks about Basel III quite a bit. This one probably going to come through a little bit of pullback right now, which is fine. But again, you're right here. This is the old New York Community Bank. So if you wanted a retail, like a real estate trade, regional banks, oddly, very much tied to their regional real estate areas. If you think about it, it makes sense too, because if their regional real estate markets are going to recover, I mean, they're going to be making a lot more on loans, or they're going to be making a lot more loans. So why home sales, existing home sales matters, things like that. Basel III is about a bank keeping their assets under $100 billion, which when that goes through, that means that they're going to have a lot less regulatory pressure as opposed to large banks, and would set someone up like this better for look at this. I mean, this is Silicon Valley Bank. I mean, this one never recovered, but in the area. There's Boston Properties for a REIT, or there's SLG for kind of New York area REIT, which SLG is smaller cap looking possible, but those would be 2 REIT plays for sure. We'll look at some neo clouds just to see. Iren, right back into resistance. You got to wait. Nice little bounce, exactly where you want to see it. But again, you got to get through this general area. High end 48s, but it's got to get through. It's at the pivot line for sure right now. Meta, although, across the board, this one is looking good. If there was if you really believe that there was going to be this massive Mag 7 rotation inside the Mag 7, then maybe you would fade Meta, but I don't think so. We got our kind of death cross buy, which is so funny. But I think this goes through a little consolidation. I still think that 640s-ish remains support, but sideways action right now. This morning's move, technically speaking, this red line is a 200-day simple moving average, smacked its head right on the top, just like it did before, by the way. So, 1 shot, 2 shots, like 3 shots here, give it a pullback into that 650, give it another shot. Next one should do the trick. I'm not moving here. This looks fine. If we're looking at other charts, if we're looking at next year, usually I pull out one of these 364-day charts. And this is the annual candles for Meta. So look at this. This is 2024, by the way. Nobody does this. 2024 all-time highs. If that price, what is that price? Pretty sure that's like the same price that we're dealing with right now. What does it say? 659. So if Meta can get over 659 for the year and hold next year, I would absolutely expect a second green candle like that and just continue on that massive consolidation. So that looks perfectly fine to me. Another one that's in active breakout mode. This is annual candles for Tesla. You guys tell me. I mean, if this area here was the pivot for Tesla to break out of next year or for the next years, guys, it's pretty straightforward that's 6-7 plus for 2025. Sometimes charting is this simple. I don't oversimplify it, but sometimes it's this simple. They're like, what? Okay. I got LASIK, which I was thinking about redoing soon. I got LASIK because it was actually cheaper than Doximity, not good. It was cheaper than glasses because my glasses, you buy sunglasses and then you buy. I'm just in the weeds rambling right now. You buy sunglasses and then you buy regular glasses, maybe 2 pairs of regular glasses. By the time you're done with that, what are you at? You're at like a couple $1,000s a year. LASIK, I think, only cost me like $25. I live in the Valley. So I remember I got LASIK done by the same guy, supposedly, that did like the 49ers LASIKs. So it might have been $5,000, which was going to last me for 10 years. And I was like, $2,000 a year. It's going to last me 10 years. Okay, that's $20,000. It's gonna save me $15,000. It was a financial decision to get LASIK. It was very simple. But maybe I can still wear the glasses. I don't know. You guys want to see me glasses? I have glasses, but I don't know. That was a while ago. Anyways, I think we're good for the day. I've had fun. I think this looks good. Do I expect an absolute Rolls Royce? I might buy a Rolls Royce before I buy the stock. I don't know. I don't even know the ticker. But yeah, I think this looks good where we are. I kind of gave you guys a quick overview of where I'm at for the week, for the year. I think Rivi is going to be, I think it's a transitional breakout year. FLG, that old New York Community Bank, is kind of a lotto, and it would be a longer play for that to hold, like for that trajectory to hold through. Hoodie, look, we're going to consolidate a little bit, but they're going to knock their socks off the analyst community one more time, and it's going to come when you least expect it. So if you want to try and trade in and out of that, be my guest. It's not happening. Not from me. So yeah, maybe it dips, maybe it doesn't, but that thing's going higher for longer. That's just one of the cylinders that Hoodie talks about, but in their vehicle. But yeah, Meta looks good. A lot of things good in the immediate near term. I think IWM specifically with the January effect continues to hold, and maybe we see a little bit of oil rebound, because usually at the lows, it's probably a bit overdone. But for now, that's it. I'm happy where we are. I just want to taper some expectations. This looks good, and I think the best is yet to come, because if SPY is over 750 next year, you guys know what happens to things that go over 750, right? Or 75. When you think about that, by the end of this 4-year presidential cycle, I'm looking at a 4-digit SPY ticker, $1,250 SPY 2027, late 2028. My goodness. I mean, it doesn't get more bullish. So yeah, in the meantime, whatever, little chop, little whatever. And Santa's probably coming to town. So hit the like button, people, for sure. And subscribe to the channel. And I'll see you guys on the next one. Adios. Peace.